Thank you for joining our panel. I'm David Bailey, joined by the illustrious Jeremy Gardner, and we're talking about the bear market today, so that's a fun topic. So to kick us off, Jeremy, how about you introduce yourself?
All right. Well, my name's Jeremy Gardner. I've been a serial entrepreneur in the blockchain space for now it is pretty much exactly 5 years. This is I really kind of dove into this industry in January of 2014. So it's a big milestone for me. Started by founding the Blockchain Education Network, a global educational nonprofit with about 400 chapters around the world. Then dropped out of school, started Augur, which was one of the very first projects on Ethereum, one of the very first ICOs, and the first utility token ever. After that, I joined Blockchain Capital as an entrepreneur in residence, where I founded Distributed Magazine with David here, and also started another software company called Sava. And most recently, I launched a hybrid venture hedge fund focused on the intersection of blockchain technology and social impact. And I'm now starting a men's cosmetics company.
Very busy guy. So, Jeremy, this is not your first bear market. No. Give us your observations and parallels between where we are right now and your last rodeo.
Well, you know, David, I didn't tell you I was going to do this to you, but I'm definitely going to throw you under the bus here because virtually everything I've learned about bear markets, I've actually learned from you. You know, I learned about crypto first in 2011. I was like, great, a tool for buying drugs off the internet. Kind of forgot about it for a couple of years. And then in 2013, as the market really started to rally, I began to take blockchain technology, Bitcoin really at the time, much more seriously. Bought in at around $200. And in a month, it was $1,000. I was like, this is a scam. Sold it all. And then ended up transferring to the University of Michigan, where I kind of fell into Bitcoin in a meaningful way in January of 14. And that's really when I met you. I mean, I think I met you in February at the Toronto Bitcoin conference. And right then, I think everybody was still very optimistic. You know, Bitcoin had been $1,200, $1,100 just a month or two prior. And kind of like we saw this past winter, people were optimistic that although the market was in a bit of a downturn, it was going to rally, it was going to go to, you know, $5,000, whatever, and it didn't.
The institutional money was just around the corner.
Oh, the institutional money was coming. Can someone make his microphone work? But the institutional money was coming, Wall Street was coming in, but then Mt. Gox imploded. And at that point, I mean, the fate was sealed for the industry for the next couple of years. Most people that were following Bitcoin at the time assumed it was dead. But that was the best thing that could have ever happened to me. Probably nobody else in the industry, but as a young person that wasn't invested in crypto, that was starting an educational nonprofit, you know, Mt. Gox imploding caused the whole world to pay attention to Bitcoin once again. After having forgotten about it after that crazy rally, they were like, oh, now Bitcoin's dead, and lots of people were gloating. And to me, this was a great opportunity because so many young people were learning about Bitcoin because of Mt. Gox for the very first time. They learned about this nonprofit we were building, and they were like, I want to create a Bitcoin club. There's nothing to lose. And it's that mentality, that lack of fear, to go and be a part of something that other people have lost faith in. That's when the greatest opportunities in life present themselves. You know, everyone I told I was working in Bitcoin to thought I was batshit insane. I mean, they're like, why are you working for that crazy Ponzi scheme? You know, my dad says it's a scam, and I didn't really care. And you see that again today.
And can y'all hear me?
Yes, now you're
All right,
working.
Sweet. So I'll jump in with a parallel there. It seems like the confidence in the technology is extremely tied to the price of crypto, when the price is completely an independent variable of the tech.
People don't see it as a technology. The vast majority of the world sees crypto assets, whether it's Bitcoin or Ether, as these just like shady investment vehicles. They don't understand the underlying innovation that Bitcoin, Ethereum, and other blockchain technologies represent. And until you're able to separate crypto assets from the underlying innovation that they provide, whether it's monetary or technological, you're going to inevitably tie the price to the quality of the asset itself. But keep in mind, Bitcoin 3 years ago was $300. I mean, it's one of the best appreciating assets of the past 3 years. Maybe not the past year, but you have to take a broader view of this technology. And what we continuously see, and what I kind of saw back in 2014, was this upwards trajectory, this scope of potential that transcended whatever the monetary value, the US dollar value of the crypto assets I was interested were at the time.
So we don't have a ton of time, so I want to keep us on track to hit some important questions here. I saw a tweet of yours yesterday about how when Augur was getting up off the ground, which I guess this was 2015,
yeah,
is this right?
January 2015.
Augur almost died. Tell us that story and talk to us a little bit about the experience of building a project to survive winter and the realities of selling an idea to investors in that environment.
All right, I'm going to have to tread carefully here for legal reasons, unfortunately. But I do have a fictionalized memoir coming out soon. That's my last project, so you guys can read that to get a sense of what happened. But at the high level, what happened with Augur is that everyone in 2014 was talking about decentralize all the things. Like BitPay literally had a sticker that said that. And I thought that was the stupidest shit I've ever seen. I was like, why would you decentralize things when most organizations, most sorts of technology work better in a centralized manner? You actually don't want to probably decentralize Twitter. You probably maybe Facebook, but you like lots of organizations work better in a centralized manner. However, in late 2014, Joe, who would become my co-founder of Augur, we were working on a different project at the time, and we stumbled upon a white paper for a decentralized prediction market platform. And that was really interesting to me because a prediction market is effectively a stock market for anything that's going to happen in the future. You can bet on any sort of binary outcome. And I had bet a lot of money on InTrade, which was a centralized prediction market platform on the presidential elections in 2008 and 2012, and I made a lot of money. And I was like, oh, this is amazing, because InTrade had been shut down. And it was actually a use case for decentralization that really excited me. And back then, the only serious blockchain, there were lots of altcoins, was Bitcoin. And so we wrote this white paper on how to build a decentralized prediction market on top of Bitcoin. And when it came out, it was really, really well received. It was like shortly after the sidechains white paper from what are they called? Blockstream. And Blockstream was the biggest deal ever back then. And everyone was really excited about sidechains, and they were seeing how sidechains could be used with Augur. And the Bitcoin community loved us. And that's where most of the investors were in the industry. But then we tried to actually go and build a decentralized prediction market on top of Bitcoin. And turns out, Bitcoin's not really good for building applications. Fortunately, because of my nonprofit, which had me kind of flying around the world, I had been on the conference circuit with Vitalik Buterin, who at the time was like 20 years old. And we had become buddies. We were quite friendly, and he had been advising our startup on building a decentralized prediction market on top of Bitcoin. We told him about our troubles, and even though Ethereum was 9 months away from launching, he's like, why don't you try building on Ethereum? Our developers started kind of writing that code, and they're like, oh, this works a lot better. The Ethereum Foundation worked really closely with us to optimize the coding, the scripting language for building Augur, and we decided to move to Ethereum. But when we started talking to investors, we knew we were going to eventually have to do an ICO about what we were building, and that we were building on Ethereum. Everyone was like, get out of here. No one believed in Ethereum. I tried explaining what a utility token was, and there had never been a utility token before, and it just, eyes glazed over.
What was the investors' reaction when you told them you were doing an ICO? And at that point in time, the coins that had done ICOs, very few of them, had performed very, very poorly. So what was it like selling the concept of an ICO in that market?
I don't know. Why don't you tell me? You turned me down.
Yep.
So what did you think?
Well, at the time, I thought there was no way in hell this was going to work.
Go on.
So at the time, I thought, the first thing I do is I compare it against all the other tokens I've seen, because I'm not a very smart man. So I look at things and I just compare them against other things that are similar.
He's very smart.
And it, made safe, Omni, which at the time was Mastercoin, all these things had not worked out fantastic. But I will say one of the things that convinced me Augur may be a little bit different was your endurance and persistence in pitching the idea of a Schelling point and why a Schelling point is needed for a decentralized prediction market. And I mean, I was probably around you for a year while you were pitching this concept before the ICO happened. Is that about right?
Yeah.
So anyone who has that type of endurance, it's normally a bullish indicator that they either have what it takes to make it there, or that they are insane.
And usually a combination of both.
But I did end up with some Augur, some rep tokens in the end of it. So
he could have done better. Anyhow, what's really important to take away from this is the fact that in January 2015, which was very similar to today's market, there were no investors for our project whatsoever. We couldn't get a $300,000 loan to hold us over to our ICO. We literally, we offered a high interest loan to many high net worth individuals who were like, look, we just need $300K to last 6 months to get to our ICO. You're going to get this back with interest, or you can get a really steep discount on our tokens. And we have a feeling we'll be able to raise at least $300,000 in an ICO. Like, I could literally raise $300,000 for a toenail today in an ICO. But it was a different time, and people were deeply skeptical. And so literally put every penny I had ever made in my life into bootstrapping the startup because nobody else would do it. And that's the conviction it sometimes takes to build a successful venture in this space, because it is so sentiment driven. When times are good, money is everywhere. You can literally get financing for any sort of startup. But when times are tough, even the best projects can struggle, and you have to really think with an entrepreneur's, a hustler's mentality. We were operating on $1,000 salaries and all living in the same house together, and it was tough. It wasn't easy, but Augur still exists. Augur is live. It's launched. It's working. A startup backed by Sequoia is going live on the Ethereum mainnet, built on top of Augur in 3 days. And so, you can get through these bear markets, but you can't. It's not always going to be easy. In the good times in crypto, things are really, really easy. But in the hard times, you have to make tough decisions, and you have to be willing to make sacrifices. That's what entrepreneurship is all about. And unfortunately, the volatility of crypto can sometimes make entrepreneurship seem way easier than it is.
So ultimately, Augur went on in 2016 to raise, $5 million at the time?
Yeah.
Which was like the second biggest ICO after Ethereum. Mm-hmm. So, at what point in time between when you started selling this in 2015 and when you actually did an ICO in 2016, the price of Bitcoin had gone from 200 to 400-ish or 500?
No, it had gone from like 500 down to 250. It had gone down.
Over the period in time in which you're selling the concept of wow.
Yeah, we raised really at the bottom.
So at what was the point in time, or what do you think was the core catalyst that took y'all from not being able to get a $300K loan to having enough investors put in enough money to get $5 million raised?
The biggest investment into the Augur ICO was $60,000. So the average investment was $1,600.
Wow.
What it was I flew around the fucking world and pitched this to every single person that I could. I mean, there was no big catalyst. There were no big investors. There were no venture funds. There were no hedge funds in that ICO. It was all individuals that believed in a decentralized prediction market. That was it. This was my big problem with what we saw in the ICO madness of last year and the year before, was that people were just throwing money at anything they thought would make money. Well, unfortunately, lots of businesses could potentially make money if they ever get built. And these companies, no matter how much money you have, lots of entrepreneurs aren't capable of building companies. But what we sold people on was not on making money. It was on an idea. It was on technology that did not exist in the world that we were trying to bring into the world, and we said we would very likely fail. But people wanted to see a decentralized prediction market working, including many Bitcoin maximalists. It was the first time many Bitcoin maximalists actually ever considered making an investment outside of the realm of Bitcoin, simply because this was a technology that the world needed. And if you take that approach when you're going and selling a product, and you're patient, and you don't make promises you can't keep, it's much easier to deliver over the long term.
All right, so we have 3.5 minutes, and I have 2 questions. So
we've got 30 minutes. Come on.
We got to keep the answers quick here. But if you could take a time machine back to that bear market, what would you tell yourself in order to better take advantage of that market environment?
You know, I mean, I was so dumb back then. I mean, I literally put every penny I had into crypto. I mean, honestly, I would have put it all into XRP if I could go into a time machine. I mean, that was...
in terms of surviving the bear market, though.
But in surviving the bear market, we did everything right. You know, we cut all costs. We took on no debt. We bootstrapped as much as we could. And we evangelized like crazy. And we were iterative. We constantly were willing to pivot. The entrepreneurs that, like, you're a rare example of one of those kind of Bitcoin maximalist stingbats that really has been able to survive this industry for several years, because for the most part, this industry has evolved beyond just Bitcoin. It is about blockchain technology. It's about the broader creation of crypto assets. And those who are not willing to adapt typically die. And so that ability and willingness to adapt is absolutely necessary for survival in this industry.
So let's end on the question that maybe everyone in this room is most eager to have an answer to. What's your prediction for when this bear market ends? What's the catalyst that causes this bear market to end? And you know, what advice do you give people in the room for preparing for that change?
So, I mean, let me ask you, what do you think was the catalyst for driving crypto prices up back in 2016, 2017?
Rising price of Bitcoin. Rising price of Bitcoin driven by the halving.
So that helped. That helped. And then all of a sudden, all these announcements that had been made from 2014 to 2015 to 2016, they started to catch up. And the media started to look at all these developments, and they saw Bitcoin's price was going up. They're like, wait, this industry is actually really kind of compelling. And what you have now is you have all these obituaries being written for crypto, for blockchain technology. But at the end of the day, if you look past that, you go to CoinDesk, you go to Bitcoin Magazine, there's so much being built today. There's so many interesting investments. There's so many, like, governments, large enterprises, banks getting involved with this technology, NGOs. And what happens is that it's like a snowballing effect. You know, all these positive developments kind of get swept under the rug. But, you know, actually, so I guess it's not a snowball. It's more like a mothball. But it's kind of just, it's growing and growing. And then all of a sudden, you know, we'll have a halving in, 1.5 years of the Bitcoin. That inevitably pushes the price up. You know, also, you know, ETH is, you know.
There's always growing use of Bitcoin or
right.
crypto.
And then you have real use cases coming to market now. Augur is live. Veal just went live with their product on top of Augur. And all of a sudden, people are going to look at blockchain technology and be like, oh my God, it's happening. It's here. It's actually part of our lives, and it's meaningful. And as those, you know, it will take more than it took in 2016 and 2017, but it will be the exact same thing. There will have been all these positive developments, so the slow moving of institutional capital coming into this industry. Maybe not in large amounts, but they'll be coming in, and all of a sudden, you know, the media will begin to pick up on this. The price will have begun to rally. And then all of a sudden you have FOMO and speculative madness again.
And the cycle repeats.
I hope not. But
so pick a date. When do you think, what quarter of what year do you think we hit bottom?
Bottom? What's bottom? I don't know. It feels like the bottom, you know, when I have to wake up at 8 in the morning like I did today. You know, it's very relative. I'd say we're going to see upward momentum that is discernible, where you can say, look, crypto asset prices, this industry in general, are moving in a very upward instead of plateaued direction. And at that point, who knows what the exact catalyst will be, but it's going to be no later than probably 6 to 3 months before the Bitcoin halving, but likely to happen within the next 12 months. January this time, I would say most crypto asset prices will be higher than they are today, and we will be seeing real daily active users of different blockchain-based applications.
So I'm going to answer my own question very briefly, but we are out of time, so this will end on. I can only feel qualified to speak on Bitcoin, but my personal guess is that this quarter is probably going to be the bottom of the crypto market.
So that's what I said. I woke up this morning. I felt like we were at the bottom, but it's just
and all right, so I also really recommend reading a very interesting report that was circulating on crypto Twitter the other day. I think we published it on Bitcoin Magazine if you check the homepage. But a very interesting report on UTXO age and how that data relates to different cycles in the crypto boom. Highly recommend checking it out. So with that, that's all the time we have today. Hopefully this has been helpful in helping you survive crypto winter. And remember, all that matters is that you survive. So hodl. All right. Thank you.